Hey guys, I'm Dr. V, and you are watching a live day trade of the Micro E-mini futures using my momentum trade technique. Make sure to watch the end of this video so you can find out how to learn this technique. Okay, I have just taken a short position, 8 contracts, Micro E-mini futures. I am going to remove my limit order to exit. I'm going to keep that bottom open. Trading 2 time frames, you're looking at a 15-minute on the left, 3-minute on the right, and I have a almost perfect setup coming into range right now. It is 2:18 in the afternoon, and Fed report came out at 2 that was negative, and there's a lot of negative news regarding also some issues with the economy recovery. And so if you take a look at the 15-minute MACD, we are about to converge and very close to zero line cross. Already have a stochastic cross, and then if you look at the 5, we've got a cross of the zero line. We've got already a cross convergence, and similarly on the 3-minute stochastic, K is approaching the 20 line. Also, we are sitting under EMA on the 3 and on the 15. Now again, I am trading with 2 time frames. When you take my course, you're going to notice that I'm teaching you off of the 3-minute time frame only. So if you are new to trading, I'm doing a couple things differently, and if you're in my course, I want you to just stick with the 3-minute only time frame. Do not add the second time frame yet. You need to master that single time frame and the actions of the single time frame. Also, you'll notice the candlestick style I'm using are the Heikin Ashi candlesticks. I'm not using the normal candlesticks that are used in the course that I present. Okay, so don't use the Heikin Ashi sticks yet. If you're new to the course, stick with the regular candlesticks and the 3-minute time frame only. You've got to have that mastered first. Also, if you're starting out, I would suggest you only trade 1 or 2 contracts. I am normally, when I'm doing the trade videos, training on YouTube videos, I'm using 4 contracts, but when I trade off of 2 time frames, I'll use when I'm trading off of the 2 time frames, you'll see me use the a higher contract amount. Sometimes I'll trade 8, sometimes I'll even trade 10. The reason for that is I'm using confirmation across 2 time frames. Another way to do it is, if you are not sure of your position, you can always trade in with a smaller amount of contracts, and then as you get more confirmation, either on your oscillators or on your volume chart, you can always add to your position. And so what I'm doing today is I'm using all the signals that I have, and I'm also using news. So there were 2 big pieces of bad news today, so I'm expecting a potential movement down. I'm just going to pull back here. I'm going to show you a little earlier in the day here. As you can see, there was a pretty big push down at open, and then a recovery that took place. All of this took place in about 2 hours. Okay, and then it's just been kind of stuck. So with the news and the Fed information that came out at 2, mixed with the signals, I am taking a little bit larger contract position, and you'll see I have my stop set already at 33.75, and I am gonna, actually, now that I think of it, I'm gonna bring that up just a little more closer to the high of the day. Yeah, let's bring that, I'm gonna bring that up to 33.78. I want to have enough room for the movement. I don't want to get stopped out, so that's why I'm kind of hanging back. All right. Holding kind of steady right now. As you notice, we're about to get a double cross of the 0 line on the MACD on the 3-minute chart. Okay. Also, I'm still watching this 15-minute MACD. Convergence is very close, and also very close to 0 line. So if we can get a break of the 0 line on both MACDs, and also if you take note of the stair-stepping effect of the orange blocks, that's another thing we're looking for on the 3-minute as well as the 15, which obviously you need more time to visualize that. The Heikin Ashi candles, you want to look for the shadow or stick to be pointing down on a short position. So we visually have that, and then we also have contact with the Bollinger Bands here. So those are all the kind of things I'm looking for. More confirmation, we would want to see EMA crossing through VWAP, which is this purple line. You can also have that if you're in a longer trade, longer time hold of a trade. You'll also get that on the 15 over time. I'm just not sure how long I'm going to get in this trade for, but things are lining up fairly well right now, so that's why I'm taking again a 8 contract position. Okay, everything looks good. Volume is decent. We're just under 5,000 contracts on the 3-minute. I like to trade between 5 and 10. Okay. We've got about 30 seconds left on the 3-minute candle. So let's hang in for about 30 seconds here. Getting a little bit of an increase in volume now. I want to see if we get a little more push toward confirmation here as this next candle forms. Okay, that looks pretty good. Signal wise, I'm still watching the 15 MACD. That's what's going to give me confidence, more confidence, is that cross on the MACD. Now again, that's a 15 on the left that you're looking at, and so that's only going to create a bar every 15 minutes. So it takes a little longer, but you can at least, looking at the MACD line, you can still see movement. But when you get that formation of a bar and a confirmation cross on both the stochastic and the MACD, that's what you want. And my best trades are when I've got confirmation on the 3 and the 15. all 4 of my indicators, plus volume, plus Bollinger Band, plus position of EMA, all of that coming together gives you the confidence to hold a longer trade. Usually I'll be going in and out within, say, 20 minutes. But when you get the confirmation on 2 time frames, that can give you the ability to get in and out and hold longer positions. It can also give you confirmation of a directional position where you may get out and look at a pullback and then make a re-entry, and you can do that. I've noticed on the Micro E-mini, the consistency for a retreat or a retrace tends to be 2, maybe 3 times. When I'm talking in the course about waves, that's kind of what I'm talking about. But when you're using the Heikin-Ashi candlesticks, it's a little bit different sweep. So the waves are more maximal at about 5. I think with the course, when you're using regular candlesticks, you might see is upwards of 7 to 9 waves on the micros as a consistent pattern. But on the Heikin-Ashi candlesticks, it'll be a little bit different, more controlled flow, less noise, and so the pullbacks are more obvious, and again, there will tend to be 5 waves. One other thing I want to mention on the dual time frames. Now, the settings I'm using are the same ones from the course. Okay, so when you've mastered the 3 and you are comfortable enough to start adding the 15, which, by the way, we just got confirmation. So here we are. If you take a look down at the 15 here, where my cursor is, this is the confirmation. So we've got a cross of MACD, we've got the break of the 0 line. That's what confirms a directional move. Again, if we look at the MACD on the 3, we've got a stair step down, we've got dual break of the 0 line here, okay? We're below 20 on the K line of the stochastic. Again, the settings between the 15 and the 3 are the same ones that I gave you in the course. So if you jump to the point where you want to add in another time frame, use the same settings, specifically on the stochastic, the slow stochastic oscillator. I have very specific settings in there that I've kind of found work well, and I've figured those out over time, specifically to the Micro E-mini. So use the same settings. Okay, so let's keep an eye on this for a bit. Everything's looking good though. We even have, if you look on the 3, the EMA is getting real close to crossing the VWAP right now. Okay, same thing on the EMA, SMA. I want you to use the same settings from the course. Okay, make everything identical. All you need to do on a second time frame is hit the plus sign on your platform and add another chart. Once the chart is engaged, just change the time frame. You can manipulate it to any minute amount you want. Again, I'm using a 15 and a 3. So the trade has been running now for about, I guess, over 90 minutes. I've been in this trade, and it is getting almost to the end of the regular trade day at 354, 355 right now. So massive sell-off has been taking place. I'm going to go ahead and get ready to exit the trade. And this can even continue to keep going down after they close, but I am going to exit before that happens. Let's see, we're running at 27 right now. just going to hang back just a little bit longer here. I want to see if this pushes down again. A lot of times, right at the end of the day, this thing has been selling off dramatically. We've got about let's see, we entered at 67, so like a 40-point move right now. If you hang on just a sec, guys, I gotta pay attention here for a minute. Let's see, 27 right now. 25. I'm going to start bringing my stop down and preparation to exit the trade. It's running at 23. I'm going to come down to 25, and that's it. Okay. I just got stopped out. So $1,681, $1,681, and that trade I was in for about I guess about 100 minutes. So just to kind of rehash what just happened. So we had a really big market sell-off, and if we look at the oscillators, looking at the 15 over here on the left, you see the continual downward movement and increase in the size of these bars just kept getting worse, I guess you could say, on the sell-off. Really bad report mixed with really bad news caused big sell-off. NASDAQ, S&P, both of them were just crashing. And so as you can see, the stair-step pattern on the 15 stayed consistent. Never had a cross on the slow stochastic. On the 3, came close to crossing on MACD, but never did. Stayed on the downside. A couple cross points on the stochastic on the 3, but I just decided to stay in. You could have taken the pullbacks on this. There was one here, and then there was one here. And again, earlier we were talking about the waves. So on the Heikin-Ashi candlesticks, here's 1, 2, 3, 4, 5. That's what I was talking about when I said 5 waves. You'll commonly see that, but not this dramatic. This kind of a move is pretty large move. So, but again, fairly uncommon to see that huge of a move. But with all that bad news, when you see these big sell-offs start to happen, a lot of times you can hang in there and just ride the thing down, and it'll bounce. As you can see, the price point bounced off the EMA up in through here, never really broke, very slightly through, never reapproached the EMA. It stayed back away from it, and so that gives you confidence to just kind of hang in the trade. The only iffy, shaky spot was up in through here. So if you felt like it, honestly, I probably normally would have gotten out and then re-entered when I started seeing this happen, but because I'm using the 15 and this frame of time in here, it was still building on the 15. I didn't see any weakening of that signal, so I just figured, what the heck, we'll just hang in and see what happens to it, because I had a feeling with the news enforcing what was happening, and I was watching the NASDAQ and S&P just collapsing. So, but you could have exited and gotten back in if you felt like it. Maybe here you would have made a little bit more money off of the trade, but the getting in and out part of it, it's like, why bother? You know, when you're getting the signal to hold the position, just write it out. Now the other thing too is the account size on this particular day. You would have had to have had about let's see, 250. Probably would have had to have had about $700 or so to trade with 8 contracts like that during the regular margin, regular hours of trading, which on this platform we'd be talking 9:35 until 4 o'clock as the normal trading hours. So that's why I exited there. You could have held. If you notice, we're looking at 2 dojis on this 3-minute right now, so it's pretty much stalling out. Volume's dropped off. It's a minute and a half past 4 now, so I think everybody's left the party for the most part. But it's not uncommon for the micros to continue to trade about 15 more minutes. But generally speaking, if you built up your account from how we talk about it in the course, if you're going to trade, say, 1 to 4 contracts, about $250 is enough to have in your account on this platform, and you could trade that. And once you get maybe $1,000 and a lot of hours under your belt, you can start adding contracts. So, but that was a pretty good trade there. Those are rare. That big of a movement is rare. Usually with the micros, you're talking maybe a 10-point move, sometimes a little more, but to see a massive sell-off of 40 plus points doesn't happen too often. Yeah, it's still going down. It's actually still fading out. The low was 33.1975, so that's a pretty huge pop down. So I think that is it. I think that's all I want to tell you all. Okay, so there you have it. Big trade. Doesn't happen all the time, but that was a big one. And that'll do it. So on to the next. If you would like to learn this safe and effective way to trade, click the on-screen link, Learn to Day Trade on a Budget. Also, be sure to subscribe to this channel for quick access to more live trade videos. Good luck with your trades, guys.